Oh, hello everyone, it's Susie from ESOTERIC Trading Solutions. I hope you're all well. I hope you had a great Christmas and a very, very happy new year to you. Please do look after yourself. Please look after your family, your parents, your best friends, your really good friends. Please look after all your animals, your pretty cats, your beautiful dogs. And please just be kind to people in this world, just to make this place a better world. It's becoming more and more unpleasant, and we can change this as people. So have a good new year, and please do stick to your new year resolutions. I know I've got to go to the gym more, so I intend to do that. So today I'm going to be talking about China's economics, and also China's cryptocurrency regulation as well. China's very, very interesting, I have to say, and I've never been there, but it's a place I would like to go to. So the Chinese have over 1.4 billion people in their country, which is a lot, and they have more males than females. They have 106 males versus 100 females, or more than 50 million more males than females. As you know, it is a communist country, but it's a communist country of sorts. It basically has capitalism as well. There's more millionaires coming out of China than anywhere else but for America. And as you know, China had a one-child policy from 1979 to 2015, where it's a one-child policy. But if you're in the rural areas and you had a girl, you could have another child, and that applied to about 500 million in the rural area. So the one-child policy is a bit of a misnomer, I'm afraid, because it did apply to about 500 million people. So China's GDP, or gross domestic product, has run roughly between 5 to 12% over the last 20 years. And it's important that China's GDP does run above 8%, because they need that growth in their economy to get people out of the agricultural sector to move to the cities and to change their economy from an agricultural economy to a service-based economy. Now, if the economy doesn't run generally at 8%, then it's very, very difficult for them to create jobs, employment, to increase industrial production, to create consumption. So it is pretty important for the Chinese to do this. Now, in the last 20 years, China has gone from literally slums to incredible new cities. Their infrastructure, from what I'm told, is just unbelievable. When they decide to build a train station, something like that, it literally gets done within a year. Now, China has become a superpower, and one of the biggest bone of contentions is where their renminbi is, or their yuan, given their currency to the rest of the world. Now, certainly Donald Trump, the President of America, jawbones the Chinese because he believes that the currency is very, very undervalued, and a lot of people have actually said that. The renminbi, or the yuan currency, is very undervalued. Now, the renminbi it's an official name, and the yuan is basically a unit of exchange, where the renminbi is basically the medium of exchange for the currency. It's a subtle difference, but the yuan is basically a unit of exchange, like 1 yuan, 2 yuan, 3 yuan, that sort of thing. So there has been a lot of controversy over the years that China is purposely keeping their currency undervalued. Now, the Chinese government controls their currency, and they do put exchange controls on to who can take money out of the country. And as you can see by this chart here, the Chinese yuan against the US dollar has depreciated. So this is against US dollars. So the US dollar is strengthened, so it's gone up, whereas the Chinese yuan has depreciated. Now, with a cheap currency like the Chinese have, it actually gives them a competitive advantage in trade, which means their goods in their home country become cheaper than anywhere else. So with a cheap currency like they have, it means that anyone from the rest of the world can go and buy their goods, and their goods are much cheaper than other Asian goods or other Western goods. Now, what that means is China generates their own industrial production, their own growth, and their own employment at the expense of the rest of the world. So if China basically exported, say, for example, clothes to America, it means that America would buy cheap imports from China, and essentially the American clothes producers would lose out and would lose their jobs. And that's what President Trump's talking about. So effectively what's happened is President Trump has basically put a lot of tariffs in place, 360 billion of tariffs in place, anything from 15% to 20%. And in reaction to that, the Chinese have come back in the last couple of months and put in tariffs 110 billion. Now, China has the largest official reserves in the world, which includes foreign exchange, gold, and special drawing rights. They are trying to minimize their US dollars because they really want to start trading in cryptocurrency for themselves. China is the biggest producer of wheat, rice, coarse grains, and tea. Very big producer of food, but they have to keep a massive production to feed their population. And there have been times where they've actually had to import food because they haven't had enough food. They also export wheat and coarse grain as well. So generally they've had a surplus trade balance, which means they've been bigger exporters than importers. In other words, but China buying from the rest of the world, they've generally been exporters, which means they've received foreign currency receipts from the rest of the world. Okay, now often if you're in a country where you're buying Chinese imports, so for example, you're buying the Western goods, you're buying, say for example, white goods, say, a fridge or an oven from China or clothes from China, you're basically buying them at very cheap rates compared to domestic production, and effectively you're buying them at deflationary rates. So literally what this means is when you buy white goods from China or clothes or whatever it might be, or office works or whatever, it basically, because they're so competitive, it actually puts the domestic production out of business. And we've seen that in Australia as well, and we've seen it in New Zealand. China is also the biggest producer of coal. They're very large producers of lead and other types of minerals, but they do import coal from Australia particularly. They're also the second largest investor in other economies, mainly Africa, which is very interesting. They're doing a lot of infrastructure in Africa, but I've been told that they, pretty much use a lot of resources in Africa and they don't actually pay for them. Now, China's crypto regulation, basically, they've banned it for the normal person. They're not allowed to buy or sell cryptocurrencies in China. They've closed down platforms or any sort of trading platforms for the average person. China is big in blockchain. They have over 6,000 patents in blockchain. And they're very serious about cryptocurrency for themselves, the bank and the government. They've decided they want to test a central bank digital currency. They said that it'll be ready to go live this year. And they want that digital currency, the central bank digital currency, against renminbi. They want the renminbi to be traded more in the world than what it is now. Now, certainly Russia and China are trading the renminbi together. Also, China announced, Chinese foreign exchange trade system announced effective from the 1st of 2020, they're reducing the rates of US dollars, which is interesting. So they have a basket of the yuan against 24 different currencies, and in that basket, they're reducing the weighting of the US dollar. Because China's made it very clear they don't want to have to hold US dollars or deal in the SWIFT system in the US, because the US has the capability of closing their accounts down or controlling their accounts when there's some political problem or when there's some sort of embargo or trade embargo. So this is another reason why China want to trade within their own central bank digital currency. So they avoid SWIFT just like Russia. They don't want to have to deal in the SWIFT system because it forces them to hold US dollars in US dollar bank accounts, and they then don't have control over their own accounts with the US if it gets embargoed. Also, China's Security Regulatory Commission has been approached with an ETF, an exchange traded fund on the Chinese stock exchange, which is looking at pretty much having an index for all the Chinese stocks that have cryptocurrency or blockchain exposure, okay, which I think is really important as well. Another thing is too, they're looking at changing a lot of their indices so that they have more exposure to other currency pairs apart from the US dollar. So Russia and China have actually been trading with each other and settling in renminbi and ruble in terms of cross-currency swaps. So they've actually been avoiding the US settlement system SWIFT. Interestingly enough, Russia is also talking about their own central bank digital currency. They've said that they want to launch one, and they want that to be against gold. So if you do look at the purchase of the Russian central bank and the Chinese central bank, both of them have been buying quite a lot of gold at the moment. So keep an eye on these two, particularly China and Russia, in terms of what they do in blockchain and cryptocurrency. It's certainly going to be a driver for markets going forward. Anyway, guys, thank you very much. This is all for me today. And if you've got any questions, please do come back to me. Thank you.